Hello, very good afternoon. This is 80 now and you're watching Closing Trades. I'm Anisha Jain. With me is Aisha Faridi, and the closing trades on the day of the expiry are not looking very promising. We're below the mark of 19,300 and it seems like the expiry is just going to be around that range of 19,300 thereabouts, which has become the new range for the market. The bank Nifty is underperforming a bit. There's a drop of almost 0.5% there. But having said that, the broader market is quite vibrant and that remains the key theme. In fact, 43 stocks out of the Nifty 500 are sitting at 52-week high levels, and there's only one stock which is actually at 52-week low, and that tells you the kind of market that we're in. The broader market is where the party and all the action is, and there are a lot of stocks there which are sitting at record high levels or all-time high levels. It's auto sector that's leading from the front. Tomorrow, of course, we'll get the auto sales data, so ahead of that, the excitement is quite high. We already heard from the Maruti management that for passenger vehicles, August has been a great month, and that's what is getting factored into the stock price as well. The other pocket which is doing well is the mid-cap IT. So whether it's a Persistent, a Coforge, a Birlasoft and other names as well, they're all doing well in the trading session. Stocks at life high. Maruti deserves a mention. It's above the mark of 10,000 yet again. For the last 3 to 4 trading sessions, it's been consecutively higher and it's sitting at record high level now. Ditto can be set for Persistent System as well as BSE, which is gaining a solid 7% today. In fact, even the hotel stocks continue the momentum. So whether it's an Indian hotel, a EIH hotel, or even Chalet and Lemon Tree for that matter, all of these stocks are sitting at life high, and that's the point that we've been talking about, Aisha, that it's a broader market where all the action is.
Oh yeah, absolutely. I mean, it almost seems unjust to call some of them mid-caps also. But anyway, they're the ones which are really hogging the limelight, as are a couple of block deal names and the newly listed ones as well. So let's start off with Aeroflex. That's had a dhamaka for listing at an issue price of 108 rupees per share. That's significantly at a premium to its issue price. So it's a bumper listing, 52% higher still. And I think it started off with a over 70% gain there. Block deals, they continue. So another one on Prudent and MedPlus as well. Prudent is the sizable one, 8.5% of a block. And similar is the case with MedPlus too, wherein 12% equity has actually changed hands. And then, of course, they're the ones which have seen MSCI additions and deletions as well. They too are the ones which have been seeing some inflows. IDFC, PFC, Ashok Leyland, REC, to name some of them. That said, the texture of the market looking a little bit brittle, weak, while yes, Indiabulls Housing, couple of the mid-cap IT names, the other ones which are flying high. But at an index level, we're now sub 19,300 on expiry. So let's take it across to Kunal, Naresh and Daljit, of course, eventually on the fundamentals as well. But Kunal, you go first. What's the breach of 19,300 indicating?
So again, an important level for the index, breaking past below the 90,300 mark today could be the second closing below the 90,300 mark. I think in the last 1.5 or 2 months, the last time we closed was just about a week or back for the index. We managed to claw back just immediately post that, but consistent attempt towards a certain level may not be considered quite positive for the indices. The concern for the markets is the lack of participation across the mid caps and small caps also today. So not too many large cap stocks or mid cap stocks are participating. There is mild weakness, some profit booking across many mid cap counters which are seen. So that's also adding salt to the injury for the markets. If the Nifty closes below the 90,300 mark, then the view for the very short term could be a bit more sluggish as well as on the downward side for the index.
Right. Naresh, hi afternoon. What's looking like the weakest link? Is it banks once again and private banks?
Continues to be the heavyweights, Reliance and HDFC Bank. They continue to drift lower. And today is a day where over the next 1 hour, we'll see a lot of, say, volumes happening across the heavyweights due to MSCI reject, most of it happening at 3 to 3:30 p.m. So post that, we actually would be better off taking a fresh view from tomorrow morning and see whether we can hold to the 19,200 and 250 mark, which was the recent low. And going forward, if we can break 19,550. So for now, today, the next 1 hour is more a technical rejig rather than any, say, building up of positions purely on a speculative basis or the market expectations. So overall, bias remains positive, but the momentum is weakened on the index purely because of the heavyweights.
Those heavyweights are definitely dragging the market, but one stock from the frontline index which is doing rather well for itself is Maruti. As we were highlighting, that stock is sitting at record high levels, has been doing quite well. We should actually pull up the 5-day chart or even a 52-week chart of this one, because that one has been a good outperformer as far as the auto pack is concerned. We'll listen into the management bite, but before that, let me go across to Daljit and get his view on Maruti. It's already crossed that level of 10,000. What next for Maruti now?
See, I can't speak specifically about a stock, but I think we are very clear. We are positive on auto sector as a whole, and within the auto sector, obviously, this is one of the leaders. So a preferable one would be one would say that. But we are looking at auto ancillaries also in a very big way, because if these OEMs and the big guys do well, then mostly you will see a big delta coming in the performance of these smaller companies, the ancillary companies, especially the ancillary companies which are also catering to the EV demand. So there are this assembly companies, there is this powertrain manufacturers for all these EV companies, which have been favorites of various institutions also. Those are the ones which are on our radar. And overall view is positive on the entire auto sector.
Okay, so that's a take coming in on Maruti. Let me actually ask Kunal's view as well on the counter. 10,000 done. What next?
10,200, 10,400, 10,600.
Not 12,000, 15,000.
No, I think the markets are...
And it could be 9,800 also.
No, it could be higher. I mean, so my view is higher for the stock. But the only point is that with the sluggishness coming across the markets, I'm not sure whether the pace of rally would sustain for Maruti. So today's breakout is very strong. It's recovered almost 600 points, if I'm not wrong, in the previous sell-off. So from 10,000 last time around, I think the end of the month of July, the stock had corrected to almost 9,300 levels. So it's almost recuperated the entire loss and made a fresh swing high. And I'm expecting that the stock would close about this level today, which could be a best close for Maruti, at least over the last so many months as well as the last so many years. So that means that the stock should see a rise of momentum. But it says that with the sluggishness coming across the markets, I would probably keep the targets a bit more lower for the stock.
Right. Okay, let's take stock of what else has been happening in the market. So mid-cap IT, for instance, is one pocket which is looking okay, led by Emphasis, Persistent, Birlasoft, etc. They're not doing all that bad. And I mean, to be fair, in a weak market, you've got LTIM, HCL Technologies, Wipro, and Infi also to some degree. They're at best resilient in trade. Daljit, what's the view on IT? A contra bet still or no?
I would say that contra-bet period is over last quarter itself, when we had taken some small positions. We have added on to those positions now, and we actually believe that probably the worst is behind for most of these IT companies, especially in the mid-cap segment and the ones which are catering to niche segments. So there are some engineering design companies, there are companies which are catering to aerospace industry. So they're doing a lot of work which is specific to that particular industry, and that is doing well. So guys who are catering to auto companies, they are also doing very well. So I think you have to look for those specific niche areas where these companies are catering to, instead of taking a broad call. But valuation in the last few months have come down very well, and the stocks are available at reasonable valuation. We have added some of these names in our portfolio. I would not say it is one of the highest weight, but it's right now on equal weight to the index, one could say.
In the month gone by, in the series of August, we have seen a massive run-up in the IT stocks. In fact, month to date, let's pull up that if we can. I think that's one of the best performing sectors in the month of August, almost a gain of 2 to 3% that was there, at least for the month, if I have it right. Yes, so that's the solid run-up we have seen on the IT counters, and they've bottomed out. In fact, since we're talking about IT, why not listen into what LTIM Mindtree had to say? Because while they are talking about overall sluggishness and ramp downs being slower than expected, the deal win momentum remains quite strong, and that's why they believe that the double-digit growth trajectory should be back after FY24 has passed. Listen into that.
Well, we have said the 17 to 18% exit rate. That's what we are aspiring for by end of this, by Q4. And, we have a plan. We have a very specific program within the organization to improve the margin. And that's why we have made a commitment that 200 basis points over the next 4 to 5 years. We are pretty much on track.
there was also this aspiration of $10 billion, right? Right now, what, you're sub $5 billion? When do you see that happening? 2030?
Well, I think it will be before that, but the aspiration holds still, the aspiration is very much there. And again, it's the aspiration of the group, our group chairman and Mr. A.M. Naik, our group CEO, Mr. S.N. Subramaniam. I think they have very clearly articulated this plan. And
they've given you this target that DC, you have to achieve this target,
yeah,
right?
I think, it is not me, it's me and my team who have to get it done. And I think it's achievable. And if you look at the overall aspiration they have been very supportive in terms of what we have done so far and what we want to do. And I think this 10 billion mark has to be a combination of organic as well as inorganic. And I'm very confident that given the credibility that we have in the marketplace and the credentials that we have, I'm sure we can do it over a period of time.
Anisha's exclusive interaction coming in with the LTI Mindtree management, stock holding up 1% in trade. But let's take it back to Kunal, and he's crunched some interesting data on some stocks that are showing overbought on the RSI indicators. So let me take it across to him. Kunal, which are these names?
So I'll go with the historical perspective of what an overbought nature in terms of RSI means and how that could impact on the stock price. And I'm specifically focusing on the long-term charts over here. So the time frame over here is yearly, quarterly, as well as monthly charts for stock prices. So for example, this is the charts for Adani Enterprise. When the top grid is the indicator and the lower grid is the prices. Whenever the indicator reaches the zone of extreme overbought nature, we've seen that the stocks actually go into a top out formation. This was in the previous year 2022 for Adani Enterprise. The stock formed a major top out over in terms of indicators, and we saw what happened to the stock price, a 74% correction from the previous year closing for the stock. We'll see in the next chart how many of the other stocks, for example, Balkrishna Industries 2017, the stock formed a major top in terms of indicators. It topped out at 1187, and the next 2 years subsequently the stock corrected almost 43% from the previous major closing for itself. In the next chart, we have Atul, which is a very recent spate of correction. Fantastic uptrend for the stock from 2013, but from 9,000 levels when the stock topped out, the indicators also managed to top out. We saw the stock correcting almost 30%. Now, in such a kind of a similar fashion, we have two stocks which are actually showing signs. So this is another example, Ajanta Pharma. The stock topping out in 2016 at 1178, indicators at extreme overbought, and we saw the prices correcting by more than 55% for the stock price. So there are two examples which I have from current levels. One is Trent. Now the stock which has had a fantastic uptrend over the last 8 to 10 years. Look at the indicators; they are extremely overbought for the stock at current levels of 2060 approximately, which means on yearly closing basis the stock is extremely overbought, and we could be at a cusp of a major reversal for the stock over the next 1 to 2 years. The second is a bit of a short-term time frame, and that's Power Finance. Even this stock on the monthly closing basis. So as you can see, the previous time when the stock, the indicators were overbought, you saw the stock topping out, forming a correction of almost 22% in just a matter of 2 months. And here the stock again has formed a major overbought in terms of RSI. So we are expecting a correction on the stock. So very important indicator, helps to distinguish stocks where the risk reward is not favorable to go into longs.
Overbought RSI, that is something that you should know. And for now, what Kunal is highlighting is the fact that Trent and PFC are two stocks which is giving you indication that those stocks are overbought. In fact, Daljit, talk to me about power stocks and power ancillaries, PFC, REC, the transmission companies, generation companies, even the smart metering companies. They've all seen a solid rally across the board. Is it time now to book profits, or do you think that ahead of the election year, this rally is likely to continue?
I would not paint all of them in the same brush. I would say that probably if you want to take exposure to the power companies, you should look at generation and transmission companies. Normally, the ratio of investment in generation and transmission is 1:1. But somehow in the last many years in India, the transmission investment has been much lower than that. And therefore, it needs a lot of uplift, and a lot of more investments have to come in that. So I guess if you find a company which is actually into both these segments, generation as well as transmission, that will be a better bet, because then you are getting the advantage of both the segments. These days in power, there is a fashion to talk about renewable, and all the valuation is coming because there will be some value unlocking, etc. So that will be an added advantage, or that will be a kind of bonus for you. But on the pure fundamentals, if you want to look, look for generation and distribution and transmission companies. They will be much better placed. The power financiers, they are beneficiaries when the rate cycle is peaked out. So which again is the situation right now, because we expect that now RBI will probably start cutting down the rates, or if not cutting down, at least rates will not go up. In that scenario, the power financiers also get benefited. So yes, there is a good runway for power financing companies, and our choice is to go with the generation and transmission companies. Some of them we hold in our portfolio.
Sure, that's the take coming in, and some the power as well as the ancillary names. Let's see what some of the realty names are up to, considering Mumbai has actually recorded its decadal best in the month of August. It's registered over 10,550 new properties. The stamp duty collections in the month of August alone has increased 23% on a year-on-year basis to about 790 odd crore rupees. Of course, cases in point are going to be Lodha. You may want to look at, what Godrej Properties as well as up to, because these are largely Mumbai-dominated plays. And of course, there's Rustomjee as well, which is just going to come up on your screens, a relatively newer listing at that. Daljit, where are your preferences within the realty pack?
So in reality, we are positive because there are a lot of structural changes which have happened through RERA and all that. And most of these companies have improved their balance sheets over a period of time. If you see, the sector has come out of its problems over a period of 15 years. After 2008, it has started performing now. So which means that that long consolidation is out of the way, and we will see a good long runway for this sector to play out. Now, the choice at this time would be to look for direct real estate play or an ancillary to it. So which could be a home improvement solution company and a home improvement service provider, or it could be like ceramic tiles, paints, those kind of companies. One can club all of them together, even to the extent we can go to cement, because ultimately if construction is doing better, if realty is doing well, then cement will do well. So our view right now is that because real estate sector has played out well, all these stocks have, in terms of valuations, they are on a little stretched mode, not obscenely priced, but they are on a little stretch. So upside is limited. So better would be to look at those options. So like cement right now is where we can find a lot of value. Some stocks which have not played out to that extent, we can play on those. So, and then in these players like home building solutions and all those, again, you will find some ideas there.
It's time now that we slip into a very short break, but as we do that, listen in. Okay, before we do that, just listen in to what Sameer Arora had to say with respect to what his top bets are and what his sector recommendations are.
Broadly, in a big picture sense, if you look at our history, it'll be 50 to 60% large cap. Because, we like the big fellows, which is the banks. The urban is doing well. And mostly these loans are going to urban guys or to the salaried guys or to the guys who are earning more. And also, we are not saying, and nobody is saying that this is forever, that the rural is gone forever, then then elections would be decided on these things. So we are talking right now in a big picture sense that if you look at the fact that the banking sector is strong and doing well and hasn't done anything for at least now the calendar year and maybe even some part of last year, and it's a big part of the market, and you are getting foreign flows, and you can buy things like HDFC Bank at 3-year-old prices. It is the easiest thing for the world to do. And in whatever way you say it, if somebody is overweight or underweight, they will buy maybe 25% financials. Many people do well over 1 to 3 year period, but
That's the word coming in from Sameer Arora. We'll get you snippets in just a short while from now. But here's an ET exclusive as promised, and we learned that Torrent Pharma promoters will be paring stake in the company to fund the buyout of the promoter's stake in Cipla. My colleague Cheryl D'Souza joins in with more details on that. Cheryl, what are you picking up from your sources?
That's right, Aisha. We all know that Torrent Pharma is likely looking at that stake in Cipla. But what we are additionally learning from sources right now is that Torrent Torrent Pharma promoters are likely to look at stake dilution in the company. What we are also picking up is the fact that the promoters may look at diluting approximately 20% stake in the company. This in order to fund that Cipla stake buy as well. Right now, the promoters hold around 71.25% stake in Torrent Pharma. Alongside with that, what we are also picking up from the sources is that the Torrent Pharma promoters have already lined up debt from foreign lenders. In addition to that, also they may look at bidding in for the Cipla stake alongside with consortium of P. So there's a combination that they are going to try out for in order to go ahead for that Hamid family stake buy in Cipla. So they are going to look at a partial stake sale along with debt from foreign lenders, as well as a consortium of P is how they are going to look at actually going ahead and bidding for that stake, Cipla stake buy as well. If you look at Cipla as well as Torrent, both are cash generating businesses, and indeed if this deal actually transpires, the combined entity would become the second largest pharma by market capitalization in India, and also the combined entity will have revenues of over around 32,000 crore rupees as well as EBITDA of around 8,000 crore rupees. We did try to reach out to the management of Torrent Pharma. They have not responded to ET Now's queries, but for now this is what we are picking up from the sources. The promoters may look at diluting their stake, also line up debt from foreign lenders, and also bid for Cipla stake along with a consortium of Ps.
Thank you, Cheryl, for that. A very important story brewing there. We know that, of course, there might be a lot of players that are looking at increasing this, at buying out the Cipla stake, but Torrent Pharma might be looking at paring down their stakes, selling a part of their equity to fund this acquisition apart from deal, as well as the other metrics that they're looking to fund this particular acquisition. Do remember, for the shareholders of Cipla, there might be an open offer as well, so that's the added sweetener. But for now, Torrent Pharma is reacting negatively given the fact that there might be a stake sale coming, so that overhang will be there on the stock. Of course, whether the deal materializes or not is something that only the future will tell us, but for now this is what we are picking up. Torrent Pharma is in the fray to pick up Cipla's stake, and they might do it via the mix of equity funds versus the debt as well. But Daljeet, you look at this space very, very closely, the entire pharma sector. What's your view, if at all this does happen, Torrent Pharma looking to buy out Cipla? What would it mean for Torrent, you believe?
I think it will be very positive for Torrent Pharma, and I think they have a good track record in proving that whatever companies they have taken over, they have turned them around, they have done very well on them. Case in point will be Elder Pharma. A few years back they picked up and they have done very well. The Shalcal franchise they have developed so strongly. It is almost 2 to 3 times of what it was when it was with the previous owner. Recently they took over that Curoto, which is again a very good acquisition. So I think Torrent Pharma management is very clear and where to put their eggs, and they also know that how to turn around these companies. So this is definitely a good step. Tactical could be because the supply will come, so stock is falling, etc. But in the long run, it should be a very good acquisition. And for Cipla also, it will be good because for them, again, this overhang of promoter and not being interested, and every time the strategy changes when the CEO comes, something happens. So that overhang will also go. So for both the companies, this will be if the deal goes through, it will be a very positive deal. Disclosure is we don't own any of these companies, and as compliance, actually we don't talk about the company specific, but this is a general opinion on the likely deal.
Get that. Okay, that's the reaction coming in to the ET Now exclusive. Remember, we just told you that Torrent promoters are likely to sell stake in order to fund the Cipla stake buy. Remember, Hamid family stake buy is set to be an all-cash deal at that. But on that note, we're going to take a very quick break. When we come back, we'll track the last half an hour of trade this afternoon. Back with closing trades right here in ET Now. The dip is only getting sharper, so not just a breach of 19,300, but it's now testing the water around that 19,250 level. Under pressure, of course, are the Adani names. They've been weak from the word go. Nestle, IndusInd Bank, Britannia, ITC, Axis, TCS, L&T. SBI, HDFC Bank, it's the heavies which are really pressuring the index as we speak right now. But let's shift focus, and what we understand is that normal domestic flight operations at the Delhi airport are going to be severely impacted between the 8th to the 10th September. When President Joe Biden is going to be visiting New Delhi on the sidelines of the G20 summit, and over 25% of the domestic flights are cancelled by operators because of security reasons. Let me take it across to Samir Dikshit, my colleague, and pick up on what he's getting from his sources. Samir?
The domestic flight operations are going to be severely impacted at Delhi airport because of the upcoming G20 Global Leaders Summit, which is going to be held for 3 days, 8th, 9th and 10th of September here in New Delhi. Airline sources have indicated that per day, domestic flight operations from New Delhi airport is somewhere around 1250 flights, and around 20 to 25% flights are going to be cancelled, which means that around 300 domestic flights are likely to be cancelled for these 3 days. And the larger picture is that more than 1,000 domestic flights are likely to be cancelled because of this G20 Global Leaders Summit. The government intends to provide a secure movement for the global dignitaries who have confirmed their presence for this G20 summit. Names include like US President Joe Biden, Chinese Premier, UK Prime Minister is also going to be present. So for these global dignitaries, a secured movement is to be provided, and for that the domestic flight operations are going to be severely impacted. But what is going to be the refund status, how the passengers are going to be compensated, there is yet to get a proper clarity from the government. But the ministry sources have indicated that Civil Aviation Ministry will come up with a detailed guideline on these aspects, on the refund aspect, diversion, flight cancellation, likely in the first week of September, and that will provide a clear-cut picture to the passengers. When we talk about the Delhi airport operator, the DIAL has given a statement and has mentioned that they have received information from the airlines that 80 departures will be cancelled and 80 arrivals will be cancelled per day. So that counts to 160 flights per day. But the airline insiders have suggested that these numbers are very minimal. The larger picture indicates that more than 1,000 flights are likely to be cancelled because of this G20 Global Leaders Summit. And what we await is the detailed guidelines from the ministry so that passengers can get actual picture that what is going to be the refund status, and if not refund, then what alternate arrangements could be made.
Okay, waiting with bated breath to actually hear, just in case you'd booked your flight to New Delhi on the in between 8 to 10 September, then what happens to that. But let's get back to autos. That's where all the action seems to be, with Maruti now scaling a life high. Actually, not a life high. It's back at that 10,000 per share mark. But here's Siddharth Lal as well, Eicher Motors. He spoke at a public platform saying that the company is not in a hurry to launch any electric motorcycles just yet.
Quickly cobbling something together and saying, bloody hell, you know, everyone's in the market, we must be in the market. Everyone's in the market, EV motorcycles, but no one's selling motorcycles, right? No one's selling an EV motorcycle. So just to come out with a motorcycle is not, you know, that's not our objective. But to come out with something which is really special, which from an understanding approach where we've really understood why EV. I mean, why should anyone buy an EV? There's no reason for a motorcyclist to buy an EV today because, you know, they get such a good product out of a internal combustion engine, right? So that's the why we ask ourselves. And if it's not enough, we're not going to come out with a product, right? Only if we really take advantage of that EV and we put something out there that's path breaking, that's differentiated, that's really unique, and that people lust after and say, bloody hell, this is amazing and we really want it. Only then we'll come out with the product. There's no need to come out with something just to tell people, oh, we've got an EV, but we're not able to sell it.
That's a take coming in from Siddharth Lal. Not in a rush to get into the EV game just yet, just waiting for those sector dynamics to really stabilize. But for now, the market is not stabilizing a whole lot because we are just around that 19,260 level. Bank Nifty is one which is seeing quite a bit of pressure. That index is down about 0.6%. But just getting back to the point that Samir was making, as far as the aviation sector is concerned, yes, there will be a bit of a disruption on account of G20. But one space that is likely to benefit is perhaps the entire hospitality industry. And we have seen hotel stocks like EIH, Lemon Tree Hotel, Indian Hotel, Chalet Hotel. All of these stocks are actually sitting at record high levels. Maybe we can bring up that plate of all of these three stocks together as well. And Daljit, what's your take? Do you think it is just a 1 quarter, 2 quarter quarter phenomenon on account of G20 and World Cup that we'll see a spike, or do you think these events will keep on happening and there are a lot of triggers for these stocks to continue the rally?
View is that this major part of the rally is over now. Most of the valuation catch up and the re-rating of the sector has already happened. All the story has played out. So from here onwards, it will be just an incremental any event which comes up, then you get the advantage, or some holiday season coming in. So couple of days of advantage you get. So that big rally and the big re-rating moment, that is over now. So anybody who's entering now is taking a bigger risk. If somebody is already holding, obviously he can continue, because as long as the run continues, you can play with it. But to enter fresh, I think we will avoid. We don't own any hotels in our portfolio. We are avoiding the sector.
Hugo, thank you so much for making time and speaking with us. So hospitality is looking a bit toppish. If you're holding the stock, maybe continue, but making fresh entries, you'll have to be a bit more cautious there. But time now to take the closing trades from our chartists as well. Naresh, you go first. What's the closing trade that you're punching in? Naresh, you'll have to unmute yourself.
That would be Persistent Systems. The stock has hit a new 52-week high and an all-time high. Looks promising for the short term.
Okay.
Okay, so Persistent System, new life high already, but higher levels coming. What about you, Kunal?
Well, that will be a buy on DLF, expecting the stock to break out above that 500 levels. It's been trading about those levels throughout the day mostly, so would suggest a buy, and would look forward for a higher target close to 530.
Okay, on that note, we're going to take a very quick break, come right back, continue tracking markets on the other side.
The domestic flight operations are going to be severely impacted at Delhi airport because
back. Well, it's the day of the monthly options expiry and it doesn't seem to be happening at a great level because we are below the mark of 19,300. Yes, there's a minute perk up that we had seen on an intraday basis, but that's got sold into, and we are now staring at a level which is below the mark of 19,250. 300 points shaved off the bank Nifty today, and even the broader markets are not able to participate as much. Yes, they're faring a bit better than what the frontline index is doing, but nonetheless, there's a definite pressure which is visible across the board as well. In fact, in the last half hour of trading session, we were expecting some sort of inflows for some of those MSCI companies. So let's pull up an Eon exchange. That stock was one of the beneficiaries. Kirloskar Oil was the other one that we were tracking. Let's see what these stocks are up to. And in fact, I think we can go across to my colleague Somit as well to get a sense as to which are those stocks which are likely to see the inflows on account of MSCI, and I'm sure that will be happening over the course of next 20 minutes itself. Somit, which are those stocks?
Flows or the adjustment regarding the same is expected to happen today on August 31st. Now, these flows are likely to come in the last 30 minutes of trading hour, that is around 3 to 3:30 p.m. And there were around 8 addition, 1 deletion from the standard index, while when it comes to the small cap index, there were 6 stocks that migrated from small cap and 2 fresh inclusions in the small cap index. Now, coming to the standard index, firstly, IDFC First, PFC, Ashok Leland, REC, Supreme Industries, Cummins, Astral and HDFC AMC are getting included. The flows expected in these stocks are around 158 to 204 million US dollars, which is on an average more than 5 times the 20-day average volume. One stock that is getting deleted is ACC. Outflows are expected to be to the tune of close to 94 million US dollars, which is nearly 5.3 times its average daily volume. And when it comes to the small cap index, on the addition side, we are seeing very smaller names, but the inflows in these stocks will be very small. But compared to that 20-day average volume, the number of shares that could be traded today could be on the higher side. Firstly, on GNTD, if you see, the inflows are expected to be only 2.2 million, but that is nearly 8.6 times its 20-day average volume. Similarly, when it comes to Nexus, REIT, Kirloskar Pneumatic, Tamil Nadu Mercantile Bank, ICRA, the flows that could be today, that could be seen today, would be nearly more than 4 times its 20-day average volume. In case of Ather, Tega and Hinware Home Innovations, the flows could be more than 2 to 2.5 times the 20-day average volume. And one stock that could see outflow, and that is 361 because of lower weightage. There's an outflow expected of around 3 million US dollars, which is nearly 3 times its 20-day average volume. So keep an eye out for these stocks in trade.
Right, those stocks have been reacting to all the inflows and outflows with regards to the MSCI additions as well as deletions. Let's take a look at some of the other active movers in trade. And, we were just highlighting what a Suzlon Energy has been up to, what an Indiabulls Housing, for instance, has been doing. And Suzlon Energy, look at this stock. While, of course, the industry tailwinds are supporting, it has seen some significant order wins as well. In the last 1 month itself, the stock has risen up about almost 31%. And that, of course, is the this year chart. It looks extremely bloated, given that it was almost, I think, in single digits just a short while back. Indiabulls Housing is the other one that's managed to hit an 18-month high intraday today, and the volumes as well have perked up quite a fair bit. In fact, they're 1.2 times their 20-day averages, and it's trading above the key DMA levels as well. That's Indiabulls Housing Finance, even though it's come off a little bit from the session top, but has been seeing a fair amount of buoyancy all through this week. Naresh, just wanted to get your thoughts in on the charts on both Indiabulls as well as Suzlon.
So I'll start with Indiabulls Housing, which is an interesting chart formation purely on a technical basis. So it made multiple bottoms around 90 to 100. That is where the low was in March 20. And in the interim, 160 was the high. We paused around 160, 170 for almost 3-4 weeks. And then the breakout took place about 170, 3-4 sessions back. And since then, the stock has come back very close to the 200, 250, 210 mark. Now, the big resistance for the stock would be 230 to 250, which is where it saw a gap down back in 2021-22, which is where we also saw a deal happening in it. And the stock just went one way down after that. So for now, 170, 180 is the buy zone, 230 is a sell zone. So that's the case for Indiabulls Housing. Suzlon, on the other hand, the stock has turned around in a meaningful way. The last major breakout was at 13. 32, 34 was the previous high back in 2014-15 when it recovered. So that would be a tough area going forward. And also the stock is now at a much higher market cap. It is closer to 35,000 crores of market cap. It is almost in the top 200 market cap companies of India. So it's no more a penny stock per se. But closer to 18 to 20 is a zone where one should be looking to buy. For now, expecting it to slowly drift towards 18 to 20 as a buying zone, but not a buy at current levels.
When Suzlon hits the level of 18 to 20 rupees. Just pull up the stock of MCX because you have the flashes running for you at the bottom of the screen. It seems like there was one of the mock sessions that were done with the new software, and so far at least what we are picking up from sources suggests that no glitches have been reported so far, because remember, for MCX that's been a big overhang for the counter. They have been paying 125 crore per quarter with respect to their profitability being eroded on account of the delay in the implementation of the new software. So this comes as a big respite, and the stock is reacting positively. But we also have Anand Tandon with us, so let's try and understand from him what his take is regarding the auto sector as a whole, because tomorrow, of course, we'll get the sales for the month of August. But before that itself, Anand, what's your view? Which are the top stocks that you like from that space?
Well, the view on auto is not particularly positive for me. I think there is a lot of change that is happening technologically, as well as from the number of companies that are coming in, given the fact that EV is the new kid in town, and therefore there are many new companies which are also playing the game. That will mean that the established players, the listed players, are not necessarily the only winners that are likely. So if you look at two-wheelers, for example, there are two things that you can see. One is the EV, the other is the premiumization of the product base as it is. And we have a lot of new products coming in. The valuations for most of these companies are also not very cheap. They've had a good run on the way up, and therefore, whatever undervaluation there may have been has been mostly sorted out. If you look at the four-wheelers, again, the segments that are doing well are, for example, the SUVs, and there we have again a whole new set of launches from two competing players. So net, you have to actually wait for the dust to settle to see who the winners are. If you are really looking to play the auto segment, maybe a better way of doing it would be to play either the auto finance or even the auto ancillaries, because there at least the fluctuations are a lot less. Importantly, it's also a segment which takes care of the aftermarket. So you have not only the primary demand, but also the aftermarket to make the demand a little more stable. So to my mind, if you necessarily want to be in the auto segment, that may be a better way of playing it.
Interesting. Kunal, any of the auto ancillaries which are looking strong to you on the charts, even though your favorites are from amongst the pure play auto names?
Well, yeah, I think Jamna Auto is one stock which is looking attractive. Last 2 days, the stock has given a technical breakout, 116.17 mark. The stock is trading, I think it's 119 right now, almost a day's high. So it looks attractive as a short-term trading play. Motherson Sumi or Samvadna Motherson, I think closer to 94, 95. I think is also a very classical buy at current level. So the stock had done exceptionally well from 58 or 60 odd levels where the stock bottomed out to almost a point where the stock was trading about 100. It's now retraced some 7-8% from that 100 odd mark for Samvadna Motherson. Again, a very attractive chart for the stock, and I think at 95, 96 levels, I would be extremely bullish on the stock. And then the pure play auto stocks, Maruti is the one which looks attractive from a short-term trading play. Would expect at least another 400 points on the upside, so 10,400 as a near-term target for the stock. And then the usual likes of Tata Motors, etc., which look attractive.
Okay, Maruti of course has hit a life high today itself. But since we're on the subject of autos and tomorrow is the 1st of September, you'll have the auto sales data as well for the month of August trickle in. Shrishti is waiting by to tell us what the market is expecting.
Well, yes, for the month of August, we are seeing a healthy demand pick up across all the segments. Majorly, we are expecting a number to be green when we compare the numbers on a month-on-month basis. But it seems like that the auto sector is getting prepped up for the festive season as inventory is seen to be inching up. Let's talk about the segmental performance expected from the two-wheeler segment. We are expecting the domestic demand to sustain, giving the push from the passenger vehicle segment, though the inventory level is seen to be inching up. But the dealers are highlighting that the demand is once again gaining momentum, as well as some of the new launches from the likes of Tata Motors in their CNG model is seeing traction. From the commercial vehicle segment, though this time the fleet utilization remained weak due to the seasonal impact, but the demand is shaping up in the positive side here as well, and the tractor demand is also expected to be robust. Talking about the company specific numbers from the passenger vehicle space, we are expecting a jump of 1 to 2% from the likes of Mahindra and Mahindra Automotive Division, Tata Motors, as well as Maruti Suzuki. But in the commercial vehicle space, do watch out for Ashok Leyland numbers, because on a month-on-month basis, we are expecting a jump of 4% over there. Over 15,500 units is what the company is expected to report. And for Eicher Motors VECV as well as Tata Motors commercial vehicle segment, we are expecting a flattish sort of a growth. In the two-wheeler segment, though the domestic demand is seen to be supportive, the exports demand and the sales is expected to be flat from the likes of Bajaj Auto as well as TVS Motors. But do look out for Bajaj Auto, because herein we are expecting a jump of 10% on a sequential basis. Hero MotoCorp, a sales uptick of 7% is expected, though on a back of a low base, because last month's numbers were a bit disappointing. And TVS Motors, Eicher Motors, Royal Enfield expected to show a jump of 3 to 6%. And lastly, from the tractor division, M&M Tractor expected to report 22,000 over units, and Escorts expecting a jump of 8%. Over 6,000 of units in the sales data is expected for the month of August. So these are the auto sales expectations for August.
Thanks, Shrishti, for putting that into perspective. We'll watch out for the data coming in from auto sales. Let's pull up the counter of Jio Financial Services as well. After we reported a couple of days ago that the parent company might be looking at buying some stake, that stock has been locked in upper circuit. But suddenly in the last few minutes, we have seen a sharp drop in the counter. It was trading with a gain of over 4%, almost at upper circuit. And from there, it has shown a complete bit of reversal, because remember, the stock was going to get out of Sensex at 2 p.m. today. That was what the analysts were expecting. That seems to have worked out, and maybe some flows change, etc. happening there. So that's what we are watching out for as far as Jio Financial Services is concerned as well. But Anand, what's your take regarding the entire IT pack? The last month has been rather solid for the IT companies. Quite a bit of momentum today as well on mid-cap IT. Would you be a buyer in any of the names?
So the momentum has been solid, not from a business perspective, but from a stock market perspective. And that is the key challenge that you have in IT today, that you are rotating into IT for a lack of other good plays. But at the same time, there is no case that is being made that the IT sector is actually going to either perform very well in the near term, or that the outlook has improved in terms of the demand side of the equation. So net, should you have it in your portfolio? Absolutely. I think, at an appropriate time, and maybe that time is now, you may want to at least go, people had gone underweight on that sector, maybe you want to go neutral. But if you look at the earnings momentum, it's not going to happen anytime soon. I mean, the numbers are still going to be fairly weak. The best thing you can say about IT is that it is underowned, and most of the negative is already in the price to that extent, or at least is well known. And therefore, unless there are further surprises on the downside, we are unlikely to see any negative surprise from here on. In fact, if at all, one hears of hiring resuming in the US for many of the frontline companies which had laid off a large number of people in the early part of the year. And therefore, you could assume that some of that demand will finally trickle through back in India, and maybe the numbers here will also start to look up. But it is more a function of the fact that the overall market is expensive. There aren't too many other sectors. Therefore, as a defensive, IT is not a bad place to be.
IT, but we had Sameer Arora earlier today in the studios, and here's his take on where the urban consumption and premiumization trend is headed next.
I don't like railways, or I don't like anything where government is a big customer. But defense we own, because defense there is no choice also. And you might, because there are only 3-4 of these companies, you are not really winning on L1, you are basically being assigned these orders. So you might get paid on time because the government views you as basically their arm.
Yeah.
So if you have to make the next thing, but the railway guys getting orders and all, I have this simple thumb rule. Okay, let me ask you. So my big picture thing is that in the end, many of these guys don't get paid on time, so therefore they are hurt. But according to me, the guys who get paid on time get doubly hurt. Hotels is not storytelling, but it might be near the end. The hotel rates are, a cricket ke liye they will work for some time, but after that, it's okay. According to us, all the times, by the way, we show this in one of our presentations, that nearly no fund, nearly ever, has got even the performance which the 150th stock of the index has.
So there's no FOMO, you're saying?
Correct, because there's so many of them. Yeah. Imagine that if you just rank last year's rank, the 150th stock was from the index, and you're not talking about some non-index stock, was up 16%. Which fund, general diversified fund, was up 16%? None. In the 18 years, I have only managed to get the 150th stock performance 3-4 times for the full fund. And really nobody ever gets it, or once in a while somebody gets it. So that means so many stocks do well. So if so many stocks do well, why bother about FOMO? You could use that for Tata Motors if you so desired. That it doesn't matter, you are not going up alone. So let me choose my factors which I like, and maybe 10 stocks I thought will not do well. So in theory, there's 140 more that are going up, and I can choose from that, but I don't need to compromise. I think that is the big picture.
But since you talked about it being a flexi cap fund, is there a bias that you have right now, given that mid caps are the ones which are at an all-time high, and maybe some value in large caps right now?
We don't know that. The fund manager will decide, but broadly in a big picture sense, if we look at our history, it'll be 50 to 60% large cap. Because we like the big fellows, which is the banks, and
which are not doing anything.
No,
right
that
now.
is good. That is, you are storing something for the future. Means you have to keep chiseling away. So the good thing is now mid caps, they are charging or waiting, like in a relay. You're waiting for your turn. There is no way that if you believe that flows are coming in from domestics and from foreigners, that one day plus minus a few months it won't happen.
No, I don't know if these goodies came via Zomato, but I know that is a stock that you'll look at very closely. But recently there have been so many IPOs hitting the market, but I believe that you've said that they're very overpriced. What's the view?
So on Zomato, may I say that you were the first guys we told when it was 52. The thing is, when it is falling every day, to come and say that we own it or we've just bought it, rather than now when everybody is buying it.
Are you selling it now then?
No, we are not selling now, because अब वो ठीक है, वो Blinkit की story बना रहे हैं, अब चलने दे सकते हैं क्योंकि it is in proper this thing, and they are doing well. So on the new IPO now, I haven't seen all of them, but the ones which are fellows, so broadly they are like that drone fellow and all. It's too much.
Why there's so many block deals happening? Just so many block deals, promoters after promoters.
Beyond anything.
What does that mean?
But this is showing the appetite of the foreign investor on the other side, because the seller is also mostly foreign in these.
Even promoters are selling this.
But PE guys mostly, let's say. And the other side is the domestic, and they feel that you won't be able to buy it on the screen because they're slightly liquid, or the size of the Indian industry has become so big. We never had it in our alliance days when I was the biggest mutual fund manager in the private space. in equities. So it is just the size. But main thing is that you are supposed to have this kind of in every market.
Okay, let's split the IT space into two: the traditional business
and the newer guys.
Newer
means
the so-called the SaaS guys, the new age tech. When I say new age, the specialized IT companies. You go to MapMyIndia, you go to RateGain. These are specialized.
So those we have, by the way.
Those
we have KPIT also, and we have RateGain also.
Okay,
but we don't have these regular
the
TCS,
typical
Infi, and HCL Tech and all that.
But within that, Samir, I can divide that traditional model into two parts: the old business and the new business. The old business is something which will grow at 7-8%, and the new business which will get challenged because of AI. So old business is a function of what happens to the US economy, and US economy is making a comeback. Beginning of the year and now, the outlook for US macro has changed. So will that incrementally change the way how OT cycle will move?
The thing is, I don't think those company things have changed. Simple thing is, look at the hiring of these fellows. They are not hiring. They themselves don't believe. They are not honoring their school commitments or whatever. So they are showing to you.
Cash-rich balance sheets.
So then why are they acting like this? Why are they negotiating salaries of a starting guy by saying give another exam? I don't have to give names of all these fellows. I mean, that is also otherwise. What does it show about their own confidence?
Helios is hiring.
Okay, so that's a take coming in from Samir Arora, but time now to get the technical experts and ask their BTSC strategies. Kunal, you go first.
I'll go with two buy calls. The first one is a buy on Voltas. That stock looks attractive. So expecting a target on the up move towards 920, stop loss 835. And Manappuram Finance is something which I've been bullish on earlier. The stock is not yet confirmed a breakout, but I believe that pretty soon the stock can see some rise in momentum. So 170 is the target for Manappuram, stop loss 144.
Right. Naresh, what about your ideas?
That would be a buy on Persistent Systems with a stop loss at 53.20, target price of 54.50. A buy on Maruti, which has seen a dip right now, a revised stop loss at 99.60 and a target price of 10,300.
Okay, Anand, you look at these, the equity platforms, financial ancillary themes, the derivatives of sorts, BSC, MCX, these stocks are doing quite well in the trading session today. Do you look at them closely?
Well, exchanges they come back in fashion every now and then, and this is one of the signs that perhaps the market is overstretched because you are again looking at ideas which, have fallen by the wayside. There is some case being made for BSE right now on the basis that, derivatives will actually increase in volume and that may become substantial. If you have a timing gap between one exchange and the other, certainly there is a chance that there will be a pickup in volume, and in which case there can be a case made where there will be a significant amount of volume that can get traded in both exchanges. But other than that, the reality is that exchange requires a lot of depth, and there is no great incentive for anyone to shift from one to the other because it is a self-propagating advantage, right? If more people trade, the liquidity increases, and finally an exchange is a platform for increasing the liquidity. I am less bullish on commodities. It has always been a problem. I think in India there are, except perhaps for gold, there is no great case for being able to trade much of the others. The other markets are small. The aggregate markets are difficult to dematerialize, as it were. So you are really looking at energy and gold as the two major places to be. So for as I said, coming back to where we were, basically BSC is the case, and it's really your view of how much volume can move in terms of derivatives for BSC to be able to be worth the increase that we have seen in the share price.
Great to have you on the show. We'll let you go on that note. In fact, just a minute left before we wind up for the day. Kunal, just a quick take on the Nifty, given that we are going to close sub 19,300.
Yeah, not a decisive close again below the 90,300 mark. I think we should be closing at 19,280.85, which means another 10-15 points margin, for the indices. So again, I think we'll have to wait out for another day where the index sustains significantly below this 90,300 mark. So as of now, we'll just wait out for maybe a couple of days more.
Okay, let's see whether there is a trend here or are we going to go back to our quiet ways. Let's see. We'll find out tomorrow when we kickstart a brand new series. But for now, we're closing in at the 19,250 mark on the